Robinhood exploded onto the investing scene in 2021, riding the meme stock mania to record highs. But that momentum didn't last. Regulatory heat, plunging user activity, and a sharp decline in stock price made many investors write Hood off as just another pandemic-era fad. But fast forward to 2025, and Robinhood is quietly mounting a serious comeback. The company is expanding internationally, introducing new financial tools, and most importantly, flashing signs of real financial strength. So the big question, did investors give up on Hood too soon? Before we jump in, don't forget to subscribe for more bold market insights from Stocks Telegraph. And let us know in the comments, is Robinhood the comeback kid of fintech or just another stock with too much hype? Robinhood's fourth quarter 2024 earnings turned heads across Wall Street. Total net revenue surged 115% year over year to a record $1.01 billion. Transaction-based revenue, led by crypto and options trading, jumped over 200% to $672 million, with crypto alone contributing $358 million, a staggering 700% spike from the previous year. Meanwhile, net interest revenue climbed 25% to $296 million, fueled by growth in interest-earning assets. What's driving this turnaround? It's more than just market momentum. Robinhood has been busy expanding its product lineup to attract a wider range of investors. It launched individual retirement accounts for long-term savers, crypto wallets for digital asset users, and 24-hour trading for night owls and global traders. Its expansion into the UK and EU marks a major step toward becoming a global fintech player. More impressively, Robinhood reported net income of $916 million in the fourth quarter, a tenfold increase from the previous year, translating to $1.01 in earnings per share. Adjusted EBITDA surged over 300% to $613 million, while operating expenses rose only 3%. The shift from growth at any cost to sustainable profitability is clear. In a fiercely competitive market, Robinhood faces rivals like SoFi, Coinbase, and legacy giants like Schwab. But in 2025, it's carving out a niche by focusing on simplicity, speed, and active trading, its core strengths. While SoFi builds an all-in-one financial ecosystem and Coinbase bets on Web3, Robinhood is sticking to what made it popular: a sleek, mobile-first experience tailored to active retail traders. The platform saw its first sequential user growth in over a year, reaching 10.9 million monthly active users in the fourth quarter. That rebound was driven by Gen Z and millennial investors, drawn to 24-hour trading, crypto wallets, and free options trading. The app's user interface remains a standout. With features like advanced charting tools and goal-based retirement planning, Robinhood is shedding its gamified image and maturing into a more serious platform, without losing the accessibility that made it popular. Robinhood's financials show a dramatic shift. The 115% revenue spike and $916 million in net income are clear signals that the company is firing on all cylinders. But is this growth sustainable, or just a short-term bump fueled by crypto hype? With Bitcoin flirting with the 100,000 mark in 2025, crypto trading revenue hit $358 million in fourth quarter alone. That accounts for a major chunk of Robinhood's transaction-based income, meaning its financials are still closely tied to crypto market volatility. And then there's the valuation. As of March 20th, 25, Robinhood trades at a PE ratio of 30.73, a PS of 13.26, and an EV 31.86, all significantly higher than industry averages. A premium valuation suggests investor optimism is already priced in, raising the bar for future performance. Bottom line, the financial growth is real, but whether it's sustainable depends on more than just Bitcoin. Robinhood isn't resting on crypto gains. It's expanding internationally, enhancing passive investing tools, and exploring strategic acquisitions. Its push into the UK, where options trading is expected to launch this year, signals a serious bid to become a global platform. The company is also strengthening its offering for long-term investors, with IRAs featuring recurring investments and curated portfolios. These moves help Robinhood appeal to a broader base beyond day traders. The recent acquisition of Bitstamp, a London-based crypto exchange, underlines its ambitions in digital assets. Meanwhile, its exploration of AI tools for product development shows a forward-thinking approach to personalization and efficiency. Together, these initiatives reflect a multi-pronged growth strategy aimed at expanding Robinhood's appeal and unlocking new revenue streams. Despite the turnaround, Robinhood still faces big hurdles. Regulation is a persistent concern. The company's reliance on payment for order flow has drawn scrutiny in the past. Although the SEC recently closed its crypto investigation without enforcement, Robinhood still paid a $45 million settlement tied to a data breach and other violations. Any future regulatory changes, especially around PFOF or crypto, could hit revenue hard. User retention is another challenge. Robinhood's monthly active users dropped from 17.3 in 2021 to 11 million in 2022. Although numbers have ticked up again, sustaining that growth in a crowded market won't be easy. And let's not forget the brand damage from the GameStop saga. Many investors still view Robinhood with skepticism. Rebuilding trust is a slow process, and one misstep could undo years of progress. Analyst sentiment on Hood is cautiously optimistic. The average 12-month price target sits at $67.89, with estimates ranging from $34 to $105. With the stock currently at $44.36, that suggests a potential 53% upside. Deutsche Bank recently maintained a buy rating, highlighting strong momentum in equity and options volumes, even after trimming its target from $75 to $61. Institutional support is also strong. About 93% of Robinhood's stock is held by institutions, with net inflows of nearly $2 billion over the past year. Cathie Wood's ARK Invest has been particularly bullish, adding nearly 270,000 shares during a recent dip. That kind of vote of confidence signals belief in Robinhood's long-term trajectory. Robinhood's resurgence in 2025 looks legitimate. The company is growing revenue, launching new products, expanding globally, and turning a healthy profit. It's evolved from a meme stock darling to a fintech contender with a diversified business model. That said, the stock is richly valued, and the risks are real. Regulatory hurdles, fierce competition, and lingering trust issues all cloud the path forward. If you believe in fintech innovation and are comfortable with volatility, Hood might be worth a look. But if you're more risk-averse, it might be best to watch from the sidelines for now. Now it's your turn. Do you think Hood is finally back, or just another relic from the meme stock era? Drop your thoughts in the comments. We read every one of them. If you found this video helpful, smash that like button, subscribe to Stocks Telegraph, and turn on notifications so you never miss the next breakout stock. Thanks for watching, and we'll catch you in the next one.